Good evening, ladies and gentlemen, and welcome to our webinar on the crisis in the Gulf, sponsored tonight by Alvexa, one of the leading Forex providers in the trading arena. Now, Alvexa is a regulated provider holding several different regulatory licenses throughout the world, but when you trade with Alvexa, you know you're trading with a world leader and a regulated provider. On their platform, you can use their fantastic web trader and do everything right online, or you can use their MT4 downloadable platform and download the world's leading and highest respected platform in the world, MT4, and you can do it to execute multiple orders. You can use their chart-based trading. You can attach expert advisors. You can even automate some of your own trading using the MT4 platform. Plus, you'll get signals that have 85% accuracy. You'll get daily market reviews, up to the minute technical analysis to help you out. But today, we're going to be looking at a piece of history to try to understand a little bit about Qatar and the situation that has arisen there. Now, throughout the 1990s and 2000s, the institutional framework laid down by the GCC encouraged the 6 member states to devise a much closer political and economic alignment, an arrangement often compared to the European Union. The last 2 decades have seen considerable progress towards a goal: increased level of pan-GCC capital flows, a move towards a standardization of taxes and tariffs of imported goods, policies encourage free movement of citizen labor, and a more unified political institution. A common currency was even proposed at one time. Now, the GCC has been fairly effective in helping these nations develop and building a zone or a community between them. The regional integration process supports the specific form of capitalization that GCC states share. The large Gulf conglomerates, both state and privately owned, that dominate the Gulf's political economy operate across Gulf borders and, similar to the European Union, are also marked by a pronounced interpenetration of capital ownership structures across the different Gulf states. So in other words, they're intertwined together. Once everything gets intertwined, it's hard to have wars. It's hard to break things up, because what it comes down to is economy and capitalization and the flow of people. And it has worked fairly well. Now, importantly, however, and this helps us understand the latest conflict in the region, this integration process did not extinguish the members' rivalries or competitive tensions. A sharp hierarchy of political and economic powers has marked the GCC since its inception, with the main pivot revolving around a Saudi-UAE axis. Now, what's happened is we get very specific personalities involved here when we deal with the GCC, because it's not like the democratic nations of the Eurozone, where the political parties change and the leadership changes, and you're dealing with the cultural part of the countries. Here you're dealing with royal families who sometimes the one person in place has been there for 30, 40, 50, 60 years, and it gets a little bit more complicated this way. It gets a little bit more personal. Now, the 2 countries have become primary sites for capital accumulation, and firms like Saudi Arabia and the UAE dominate the GCC economy in the real estate, finance, trade, logistics, telecommunications, petrochemical, and manufacturing sectors. There are also significant cross-border investments between Saudi Arabia and the UAE. Now, when we stop to look at Qatar, and we're going to do that in a minute, it's a very tiny little nothing, except it's got huge gas supplies. The axis has not been without its tension, reflected, for example, in the Emirati rejection of the Saudi-backed unified currency project in 2009, but their political alignment has developed alongside their economic ties. Now, things would be slightly different if they were using a shared currency, because that means they would have a shared central bank. And that means it's fairly difficult to blockade or stop, what they're doing now and putting these sanctions on a country. Because if they were sharing a central bank and sharing the same currency, it wouldn't work. Now, Bahrain is closely integrated in this axis as a junior partner. Its ruling Al Khalifa monarchy depends on Saudi financial, political, and military support. As of the 2011 uprisings clearly demonstrated. Now, we have to remember that the Arab Spring has left these nations a little bit uneasy and have forced them to look at different political and cultural aspects before these monarchies are ousted everywhere. This sub-alliance influenced how other GCC states relate to the rest of the world. A feature clearly illustrated by the region's trade patterns. Due to relatively low levels of non-hydrocarbon manufacturing and small agricultural sectors, the GCC relies heavily on imports. The Saudi-UAE axis mediates these shipments. They bring goods in and then re-export them to the other states, sometimes after value-added processing. Food imports are particularly important. The 4 other GCC states import more food from Saudi Arabia and the UAE combined than any other country in the world. In 2015, Saudi Arabia and the UAE each ranked as either the first or second food export to every one of the other GCC states. Remarkably, particularly since these figures include major wheat and meat exporters, including the United States, India, Brazil, and Australia, Saudi Arabia and the UAE are responsible for 53% of the total food exports to Oman, 36 to Qatar, 34 to Bahrain, and 24 to Kuwait. Now, as this process drew the GCC states closer together, it also intensified their rivalries. One of the most important manifestations of the tension came when Qatar attempted to adopt an autonomous regional policy relatively independent of Saudi Arabia and the UAE. Now, what's happened is Qatar began sponsoring different political forces such as the Muslim Brotherhood, Hamas, and the Taliban, and hosting a variety of exiled dissidents. The Egyptian cleric, I can't even say his name, who hosted popular television shows on Qatari channels, and the Palestinian intellectual Bizraha. Qatar also used its extensive media network to promote itself as a regional force, notably through Al Jazeera and its affiliates, and most recently, the daily newspaper and television channel, launched in early 2015. Now, again, Qatar is a tiny little nation, but it is extremely wealthy. And it's like having a little brother that's very strong. He wants his power. He wants, and he's going to find his friends. He's going to find who's going to give him his due respects. Now, the Arab upbringings that began in Tunisia in the late 2010 accentuated these divisions, but they also emphasized the Gulf's shared interests. By profoundly threatening the regional order and its authoritarian regimes, the uprising presented the GCC states with a sharp challenge: how to head off the popular movements and reconstitute their authoritarian order. Each state had a common interest in counter-revolutionary process, but the responses differed along the lines described above. Now, Qatar supported forces allied with the Muslim Brotherhood, while Saudi Arabia and the UAE looked towards people like El-Sisi in Egypt and former CIA asset Haftar in Libya. A contradictory and rapidly changing constellation of alliances formed around the GCC's common interests and their internal rivalries. Now, the key point, often overlooked by the media commentary on the blockade that's happening now, is that there are no principled political positions involved in these alliances. This is about calculated expediency and a pragmatic assessment of each state and how best to further their regional influence. always within the framework of reordering the region in a way amenable to their collective political and economic power. So again, you have a family of 6 brothers and sisters squabbling. Okay. Now, the question is, will the crisis blow up? Now, let's not, and I don't want to get in tonight into the Israel problems. I don't want to get into the different types of Muslims, because all of this has lots and lots of deep-rooted problems alone. Okay, but it's not the reason. I mean, Qatar has been supporting every anti-Israel faction, and the hatred between Qatar and Israel is huge. But the fact is, it's not even that. They are supporting terrorist acts that are taking place all over the world. Whether you're in the theater, the theater in Manchester, whether you were in Brussels, whether you're in Paris, okay, this is the problem, is the support of terrorism. Okay, so the question we're looking at now is, will the crisis blow up and move the markets to risk-off trading, sending the US dollar and the Japanese yen up and pushing gold to new short-term highs? Now, to date, most of the global markets have taken the move in strides. And even more so, even today, we'll talk about today in a minute, but even today, after the deadline and after the response, the markets are paying no attention. And we want to know why. Okay, and will they start taking attention, or what point? Now, investors have flocked to precious metals over the past week as the Gulf crisis sees the rift between Middle East countries growing. Investors traditionally head for safe haven assets during times of political and market turmoil, with the metal considered a safe house for cash. But this is a little bit misplaced, because gold did climb, but gold's falling back down again. But gold did climb more on the tensions coming out of North Korea than they did out of the tensions coming out of the Gulf. And this is why everybody's asking, oil's not doing anything. Oil went up for 5 days, then it fell back down. Then it climbed today, but only because there was a huge drawdown in U.S. inventory. Okay, so the energy markets were volatile, and the Middle East stock market remained weak as investors weighed the impact of the diplomatic spat, and remember the word diplomatic spat, that could have major consequences. Despite short-term gains in oil, prices moved back well below the $50 per gallon, and while there appear to be no immediate implications for Qatar's participation in the recent OPEC deal to cut production, the dispute does not present any other strategic challenges. The fact is, none of the markets are doing anything. And yesterday, Qatar on Monday, Qatar asked for, or actually Kuwait, on behalf of Qatar, asked for a 48-hour extension on the issues or the points that were submitted to them. Today, Qatar responded, or yesterday they did. Today, the Gulf states responded, and nobody's doing anything. But now the Germans have intervened and are going to take over some negotiations here. Qatar swears that it has nothing to do with supporting terrorism, and said they would open up all of their books and anything they want to the Germans. And it's really becoming more of a as the German finance minister said today, there's no war here. There's no violence here. It's a couple of people arguing with one another. It's a big argument, and we need to resolve some issues. But that's all that's going to happen. And the markets are also seeing this way. They're all huffing and puffing, but there's no, Turkey was the only one that had any militaristic response to this. And this was more like, big brother yelling at little brother and not sharing his toys with him for a while. But it's important that we get Qatar off of this terrorism. I mean, mostly this terrorism thing. Also, they're shifting or trying to shift the balance of power by becoming very, very friendly with Iran, and Turkey, which would offset the UAE, Saudi Arabia link, but it could upset the balance of everything that's going on in the Middle East. Now we have to remember, Qatar is the world's leading natural gas exporter, accounting for 1/3 of the international supplies. So there's going to be a problem with blockades and stoppages, and because Qatar supplies most of Japan's gas. So is Japan going to stop getting their gas so that they can enforce an embargo? No, they're going to ship over to Qatar whatever foods or whatever supplies they need. Same thing with Europe. Europe's in a tough situation. Qatar just turns off the gas. Now, while the Gulf's diplomatic crisis is unlikely to affect energy prices in the short term, a prolonged rift that disrupts Qatar's gas supplies could send prices soaring. That's the speculators talking. With rising U.S. shale oil output driving a global glut, the decision by Saudi Arabia and its allies earlier this month to sever diplomatic ties with Qatar provided only a fleeting boost to prices. It's not affecting anything, and Qatar produces, I think, a mere 30,000 barrels of oil a day. It's the natural gas that they produce. And you got to remember, Qatar sits right on the water. And therefore, they can have ships coming in and out all they want. And in a couple months, they'll even have all their food coming in by ships. So it's about to change. Now, Qatar's share of the output cuts of the 1.8 billion barrels a day is just 30,000 barrels of oil. I mean, in the oil market, they're a little nothing. But advisory firm Oxford Economics say Qatar's exports of oil and gas is unlikely to be significantly affected, with its main sea routes, including through Omani and Iranian waters, still completely accessible. Now, most of Qatar's almost 80 million tons of annual natural gas supplies are shipped in tankers mainly to Japan, South Korea, and India, as well as several European countries. And if necessary, all those countries will turn around and ship back all the supplies Qatar needs. 1/3 of Britain's gas imports, for example, come from Qatar. Other European customers include Spain and Poland. So the air, sea, and land restrictions imposed by Saudi Arabia and the United Arab Emirates, Bahrain, and Egypt have not so far affected maritime routes for Qatari natural gas vessels, which pass through the Strait of Hormuz. Okay. Any disruption to Qatar's natural gas could anger the European Union, could upset Iran and Iraq. So a national security exception might be invoked to justify a boycott for foreign firms and governments, including Qatar's big natural gas customers in Egypt, could oppose it strongly, fearing a precedent might be set. In the mid-1990s, GCC states abandoned an attempt to maintain a secondary boycott against Israel. So, asked about coordinated moves against Qatar, U.S. Secretary of State Tillerson urged Gulf countries to resolve their differences. It's important that the GCC remain a unified front, he told reporters. Now, the thing that overshadows this whole thing is banking. Okay. Now, on Monday, Iran's foreign ministry called all sides of the Gulf diplomatic rift to respect the sovereignty of each state, adding that a policy of sanctions is ineffective and unacceptable. Okay. FIFA, on the other hand, which is coming closer and closer, becoming a big deal, FIFA also issued a short statement saying it remains in regular contact with Qatar amid the growing diplomatic crisis. Football's World Governing Body said it had spoken with the Qatar 2022 Local Organization Committee and the Supreme Committee for Delivery and Legitimacy Handling matters relating to the FIFA World Cup. And there seemed to be no reason to think that there's anything going on with or going to change the World Cup in 2022. I mean, that is 5 years from now. Now, let's take a look at the financial impact of what is happening here. Okay. So the economic fallout loomed immediately. I mean, there was an immediate response. It's all gone past us now. As Abu Dhabi state-owned Etihad Airways, Dubai's Emirates Airlines, and budget carriers Dubai and Air Arabia said they would suspend all flights to and from Doha from Tuesday morning until further notice. Okay, no big deal. But over the weekend, I don't even have to say Etihad Airways got approval from the U.S. to stop blocking laptops because they met all the specifications. So that was followed by Dubai's Emirates Airlines getting the same approval today. They've all been making the adjustments that the U.S. demanded to have the laptop ban lifted. So the two major airlines have had that airline lifted. But, you know, when you're looking at economic sanctions and you're dealing with the world's wealthiest nation and a nation that's got a $324 billion wealth fund and $200 billion in cash, you know, a little bit of an economic sanction here, a little bit of hurt of their airline isn't enough to affect them. On the other hand, it hurts the other airlines. They're losing the business. So it's a two-edged sword. So oil prices rose after the four countries said that they would cut ties with Qatar, which is the biggest supplier of liquefied natural gas and a major seller of condensate, a low-density liquid fuel and refining product derived from natural gas. But 48 hours later, the market was fully moved past it. Qatari stock index sank 7.6% in the first hours of trade, with some of the market's top blue chips hitting the hardest. Other GC stocks also fell, and Dubai losing 0.8%, Saudi Arabia falling 0.2%. They've all recovered their losses. Now, there's one major thing that did affect Qatar, and that was S&P lowered their ratings, but since they're not selling bonds in the market, they don't need foreign investment, and they have huge amounts of cash. Doesn't make much of a difference. But the fears that the rift between Qatar and the Arab states could undermine efforts by OPEC to restrict output, put oil prices further under pressure. The ones that are hurting, though, are a couple individual stocks. But again, by today, the markets have moved past everything. European shares were lower as investors shunned risky assets amid escalating tensions in the Middle East. The FTSE index suffered its biggest one-day loss since late April. But again, they've all rebounded. Right now, everybody is dealing more with North Korea and the summit and Donald Trump's meetings with the European leaders as well as Putin, but his possible response to the ICBM fired by North Korea on Tuesday. So if anything is affecting the markets, that is. But if you remember, the markets just rallied. U.S. markets rallied to record highs again. Other parts of the market will likely see a much bigger impact as reflected in the more than 7% sell-off in Qatar's benchmark equity index. Qatari stocks lost more than $8 billion in value, marking the biggest decline since late 1990s, and they're still down about 6% because, yes, these individual companies are facing a short-term gap. So somebody who is trading on the Qatari exchange might be smart in buying up these shares because they'll all bounce back as soon as this is over. The energy and material sector were the biggest laggards as changes may cause disruption in the natural gas market. Qatar supplies approximately 1/3 of the global natural gas, and Saudi Arabia, the UAE, and Egypt are heavily reliant on its gas via pipelines and natural gas, or liquefied natural gas. Investor confidence depends also on the politics of the region, which have proven more unpredictable as the bolder Saudi Arabia flexes its muscle. And that's been the problem. Saudi Arabia grew and moved more into the mainstream. They became more powerful. They also had more control over OPEC. They kept flexing their muscle. Then this past 2 years, when they forced OPEC to continue production and started this price war with the U.S. and shale production, this angered some of its other members because they were forced, because Saudi Arabia is the controlling factor. So it's probably no accident that this royal shuffle is happening in the middle of the Saudi-led blockade of Qatar. Another commodity-rich monarchy sees it seen as too soft in Iran and Islamic terrorism. But there might be a chance for a breakthrough in the political deadlock as MBS consolidates his power. And an end to the crisis could be a positive step for the wider Gulf. The new crown prince is much more worldly, much more open, much more about capitalism and economy. He's the one shifting them to the 2030, the new 2030 plan, where they're going to be all a wealth fund and less and totally diverse out of oil products. This comes as they become a major player in the world markets and not just an oil-producing nation. And they need stability. So all told, investors will probably like the direction of travel Saudi Arabia is taking, even if the destination still looks pretty far off. A boost to MBS, and that's the initials, and I can't even say his name, it's a mile long, but he's the new crown prince camp. Even amid the recent show of geopolitical strength, will be seen as a positive step for reform. And this might be what Saudi Arabia wants to be seen as the reformer in the Middle East. Now, what we also have to take a look at is how far Qatar can rebound through this situation or stay through this situation. The Qatari Investment Authority, the world's 9th largest sovereign wealth fund, is playing a key role in helping Qatar's financial sector withstand the effects of the economic boycott by its powerful Arab nations. With an estimated $342 billion in assets, according to the Sovereign Wealth Institute, the QIA began operations just in 2005 and initially holding stakes in Qatari companies before entering the limelight with global investments. Now, what we have to remember is Saudi Arabia is quite wealthy. We know their wealth fund is very high and their oil reserves are extremely high, but they have a huge population that is mostly supported, or in great deal supported, by the government. And the government takes care of all projects, all infrastructure projects, and everything. Where Qatar has a huge wealth fund and has a very, very small population. In fact, a good deal of their population are expats and residents, and so they're not a drain on the Qatari wealth. So the thing is, there's another big country out there, and this is where a lot of it's in play. There's another big country falling under Tehran's sway, Iraq. Iran-backed militants, along with Kurdish counterparts, have been at the forefront of driving back Islamic insurgents in the country. Bilateral Iraqi-Iranian trade has increased every year since 2003, according to reports in the Tehran Times. So what we might start to see is the shift of nations, the shift of economies, the shift of trade, which could affect where the whole Middle East is in a few years. By chance, Iraq is also the OPEC members that's most exceeding its agreed crude oil target. That puts it in line with stronger criticism from Saudi Arabia as oil prices languish near levels not seen since the group adopted its output target back in November. Even the tensions in the Middle East, which would usually send oil prices skyrocketing, have had little impact so far. A more aggressive Riyadh might well see traders starting to price the political risk in, even more so if Iraq becomes the next Qatar. The biggest effect of all this actually hit immediately and hit many travelers from Qatar. Okay, because what happened was, if you were a Qatari and traveling around the world and you wanted to use your credit cards that were Qatar bank based, or you needed to change currency, you got stuck. So, but it hurt people. It didn't hurt governments. It didn't hurt politicians. But that's all back to normal. It was in less than 3 days that everybody was back to accepting everything. The stock exchanges, on the other hand, bounced back. Now, on a related note, S&P Global Ratings lowered Qatar's long-term credit rating 1 level this month. Okay, but that was about it. The Qatari Rial, okay, was trading on the futures market at an annual low, and they have recently been placed on a negative credit watch. Okay, but for them, it doesn't make a difference. In their country, the Rial is still worth the same thing. On their exports and everything, they can afford it, and it's only a little hitch in the marketplace. The Qatari central bank attempts to keep the Rial fixed at around 3.64 per dollar, but it recently reached 3.76, its weakest level on record. However, the Rial rallied this week, and despite this dip, Qatar's finance minister said that Qatar has sufficient foreign currency reserves to defend the peg. In fact, some news sources said that Qatar saw this coming a few days before and increased their dollar reserves and bought up dollars like crazy. So they're not worried about it. Qatar's central bank has net foreign reserves of $34.8 billion, not million, billion dollars in May. And Doha is estimated to have over $200 billion in liquid assets, in their sovereign wealth fund, enough to defend the peg for years, even if there was a mass withdrawal of foreign bank deposits from Qatar. But as long as they still have natural gas to export, they still have tons of cash coming in. And, the Western nations aren't supporting all of this, so to speak. I mean, even the U.S., who has a huge base in Qatar, is trying to moderate, but not taking sides at either side. Qatar's mostly vulnerable point is probably its banks' dependence on foreign funding. 36% of the commercial banks' total liabilities in May were to foreigners, including others in the six-nation GCC. Saudi Arabia, UAE, and Bahraini banks have already largely frozen new business with Qatar because of guidance from the central banks. Some jittery foreign banks have followed suit. A further tightening of sanctions could mean a mass pullout of money, but not more than, they've got tons of money so they can float it. A senior Qatari official estimated institutions from Saudi Arabia, the UAE, and Bahrain had $18 billion on deposit in Qatari banks. That would mature in 2 months, and which may not be renewed. Bank of America predicts $35 billion of outflows from Qatar's banking system within 1 year if GCC severs financial ties completely. But we're talking about $35 billion in outflows when you're sitting with $200 billion in liquid cash. Well, that's not a drop in a bucket. But this isn't going to go on for months. I doubt if it's going to escalate. But that raises the question of why central banks have not intervened aggressively by flooding the market with dollars to keep the Rial spot rates consistently in line with the peg and deter offshore speculation. But the central bank of Qatar hasn't even shown any panic. They haven't done anything. Several commercial bankers in the region, however, said they thought the central bank simply saw no need to spend part of its reserves getting drawn into battle with offshore banks. The country gets most of its dollar supplies from oil and gas exports, which are controlled by the government, so it does not need to fear offshore trade will suck dollars away from onshore companies which need them. So the funny part is all of this might have the biggest effect on Japan, because one of the countries most exposed to the crisis is Japan, which faces significant potential costs. The most obvious is Tokyo's significant dependence on members of the Gulf, the GCC, which includes Qatar, Saudi Arabia, as the primary source for its energy. And ever since, their nuclear reactors were all taken down, they have to import all of their energy. And if this drives up oil prices, it's going to be a negative. If it drives up natural gas prices, it's going to affect Japan. Or Qatar could, put Japan in a very awkward situation, making Japan export goods to them to keep their stores and shelves stocked while in exchange for receiving their natural gas. Now, Japan also relies on Qatar as its top Middle East source for liquefied natural gas. Doha provides 18% of Japan's supply in 2016, the largest proportion after Australia and Malaysia, which together supplied 45%. Natural gas has become increasingly important to Japan in the years since the Fukushima nuclear accident in 2011, which led to a shift away from the nuclear energy. It is now the second largest source of energy consumed in Japan, after crude oil accounting for 23% in 2015. And this is where we stand today. Okay, there's nothing, unless some type of war breaks out, which everybody doubts, or some type of violence. There's nothing else that's going to happen. We're going to sit down to diplomatic negotiations. It's a spank on the hand for Qatar, and we'll probably all be best of friends in a couple months again. Not best of friends, they never were good, but back into the whole family of moving forward. Every day that goes on, and it's all left in diplomacy and this brinkmanship. Here's our demands. Oh, your demands are unreasonable. Give me 2 more days to think about it. I don't like them. Let's talk about it later. And that's all that we're really saying here. Okay. And another couple days, Qatar would have replaced all of their sources and made sure their imports are coming. Because when you have that kind of money, you're also sitting right on a waterway. If you were landlocked, where your neighbors could block your imports. Now, they can't get them from their next door neighbors, which will cause a blimp, but all they do is bring them around, because as long as there's not global, like when we saw with Iran, and between the United Nations and the Eurozone and the U.S., everybody was blockaded, there was embargo for everything. This is 6 nations. So they're also wealthy enough that they can start flying stuff in. The blockade in the air. Okay. But again, because you're on the water, planes can fly around and land into you. It may be harder, it may be longer. It may cause some hardships, but it's not going to leave you destitute. So that's where we sit right now. And that is the crisis in the Gulf in a nutshell, trying to leave out most of the religious parts of it. And I tried to stay as much away from terrorism as I can. So have a very good night. Thank you for joining us. Give Elvexo a shot. They're a great platform to trade with. And we'll see you again real soon. Have a good night. Bye now.